Welcome to all of my students in today's mentoring session. Today is 6th August, 9:32 p.m. And as usual, we'll be starting with the weekly sectoral analysis. We'll be starting with Nifty, Bank Nifty, Private Bank, and so on. We'll move towards the mid-cap index. And once this is done, we'll be jumping on to the mind management session today, where you will be sharing with me your difficulties, your emotional issues regarding trading, and then I'll try to solve all your issues. All right, so let's start with the monthly Nifty chart. Now what we can see over here, as usual, I think the uptrend is continuing, the party is continuing in Nifty spot, and the price is above the 161.80% Fibonacci extension. So this is a good news. Even RSI is above 70, and this is 74.94, which means almost near 75, but it's all right because there is no negative divergence as of now in the RSI. Yes, prices are slightly overstretched, but not that much. Now there is something interesting which I don't know how many of you have read about it. I had experienced this particular phenomenon in 2008. Now listen to this very, very carefully. I'm changing this chart to a line chart. Okay, I've changed the chart to line chart, and if I zoom it, you can see the prices have made higher high over here. And now I'm trying to share with you the RSI. If you see, RSI has been making lower highs. Now this was a clear-cut sign that prices were basically the prices were facing negative divergence, and basically the momentum was waning. But what has happened this particular week, if you see properly, you can see a big green candle, not that big, but decent enough. And with the close, what has happened, the RSI has made a new high, and it has closed above the previous high of the RSI. This is generally the break of the negative divergence. What I had experienced in 2008 was there was a positive divergence and price closed below the recent low. Even the positive divergence was broken, and then I saw a very big correction in Nifty. So generally, when a negative divergence is broken in RSI and price continues to move, it generally goes up very, very fast. So this is one thing which you need to know. And in the daily chart, if you check properly, I'll just plot this Fibonacci extension. So we can see very, very clearly, prices have tested this Fibonacci extension, which is somewhere around 16,330. So if we want the rally to continue, we will need prices to close above this high at least for 1 or 2 days, and then we'll be able to see 16,450, 16,600. All these levels will come slowly and steadily. But before that happens, don't jump onto trades very, very fast. The reason for that is, if you see the hourly chart, generally I don't check the hourly charts in the weekly sectoral analysis, but this time it is very, very important. If you check properly, again I'm converting this price into line chart. You can see a higher high. RSI has made a lower high. All right. But since the overall trend is up, overall the structure, the state of the trend is up, there is a possibility you can see a gap over here. It can be filled. It may not be filled. I don't know. But 16,100 in Nifty futures is a decent support. And if you want in spot, then possibly it is somewhere over here, 16,170 to maybe 16,100 levels in round figure if you want. So this is a support band. There can be a dip. There can be a sideways consolidation. So be patient, and we'll need a close above the recent high. Only then we'll be seeing new highs coming up. All right. Now, if you go to the Bank Nifty chart, I'll first go in the monthly time frame as always. In monthly time frame, prices are in an uptrend. No issues I can see whatsoever. And now, before to the weekly chart, first I'll go to the daily chart. I'll do something different today. You can see prices have been range bound. Even on Twitter, I had posted a daily analysis, daily chart analysis of Bank Nifty future. Now this is the Bank Nifty spot. What has happened in last couple of months, consistently prices have been moving in a band. Basically you can see यहाँ से support मिला है, यहाँ से भी support मिला है, but all these 4 points, 1, 2, 3 and 4. All these time the prices have faced resistance. And over here, price has closed above this band. Now, has this breakout actually happened, or again this is a whipsaw? Let's cross check into that. And for that, I will have to remove these boxes. Now, if I plot this Fibonacci retracement, we are still at a resistance, my friend. So we'll need the Bank Nifty spot to close at least above 36,300 or 400, at least above that on a weekly basis. Then yes, we can say prices will inch higher, at least towards 37,671 or maybe even higher. All right. So you need to take that thing into account. Now, if you move to private bank, I think private bank charts have been looking very, very similar to the Bank Nifty chart. But this time, if you see, private banks have underperformed. The reason for that is Bank Nifty chart has, closed above all these recent highs. Private bank is not able to do so. Now, if I check properly in the monthly time frame, it is in an uptrend, no issues. Even in the RSI, there are no issues. If I plot the extension, again, there is no issue. So overall things are looking good, but somehow stocks are not able to move. And even over here, it is the same thing, just like Bank Nifty. It is the weekly Fibonacci resistance. You can see it needs to close above this recent high, only then we will be able to see. And one more thing, it's not just a close. After the close, prices have to consistently trend in a direction. Otherwise, what will happen? We'll have a new close. People will say that, okay, this is a breakout, and suddenly the next couple of days, boom, price will come down and the breakout is a false breakout. That should not happen. Just one day close above the above that particular level, and then consistent buying should be appearing in at least next couple of days, and prices should inch higher. Then we can say, yes, now it seems that price is going up. This is very, very important. And if you ask me any picks from my side for next few days, I would say IndusInd Bank and HDFC Bank, especially HDFC Bank, because I think this particular stock, it has underperformed, yes, but it is still in an uptrend in monthly time frame, in weekly time frame, and even in a daily time frame. Daily time frame, it is slightly, you can say, almost on the verge of a breakout, but the breakout has not happened. You'll have to wait and watch what happens. But IndusInd Bank one, and second is HDFC Bank, but my preference goes to HDFC Bank because IndusInd Bank monthly time frame is not that great. You can see over here a hammer and then a bullish bell tool. Yes, that is fine. Even weekly charts are looking all right, not that problematic. But monthly time frame charts, I don't like them. So the first pick is HDFC Bank and the second one is IndusInd Bank. PSU Bank, last time I had told you that you need to be a little bit careful, but some sort of buying was coming up. Even this candle was looking bullish. But I had also mentioned that you people need to be really careful because prices are hovering around this monthly resistance band, which has not been able to surpass. Till the time this band is not surpassed on a monthly closing basis, it will keep haunting the PSU banks. You need to be very, very careful in your approach. And weekly charts are looking all right, but if you see properly what has happened over here, a small hammer, again a small hammer, and now a shooting star, which is an inverted hammer. So basically prices are just jumping into a range. If you see, I just track one PSU bank, that is SBI. It was a wonderful move. I think 4-5 days back or 3 days back, I shared an educational view on SBI, and the stock went up by 4-5% and suddenly it has come down. So yes, that's due to the resistance in the PSU bank monthly time frame. Now metals, no change from my side. Absolutely same view on metals. Again, the price remains overstretched. Yes, but the trend is exceptionally strong. It is not ready to come down even after the RSI has gone almost near 80, it is 79.55, which means it is almost at 80. Now we move to the weekly time frame. In the weekly time frame, we can also see this is a very good candle in the last week. Again, this is a sort of a doji, not exactly a doji, but sort of doji. Overall looks fine, but again, since the monthly time frame is extremely overstretched, and these candles, if you can see properly, these are also clearly showing that there is some sort of indecision in the market regarding the middle pack. Resistance is pretty far away as of now. It's near somewhere around 6329 or 6330 to be precise, and price is still at 5841. So there is a little bit of space left for the prices to go up, but wait patiently. If you have a swing trade in the metal pack, you can take. If you have a trade already in your positional system which you have been holding from a very lower rate, you can continue holding it with a trailing stop loss. But as always, I mentioned that I'm not interested in a new positional trade in the metal pack as of now. So just be careful about that. Auto pack is very, very interesting, and the reason for that is in the monthly time frame, it is in an uptrend. In the weekly chart, I can see that there is no trend. Actually, there is no trend. The trend is absolutely flat in the weekly time frame. In the daily time frame also, I can see that the trend is flat. There is no trend over here. And 10,000 to probably around 9,900, this entire zone is a very strong support. We need to see what happens in the next week or maybe next couple of weeks in the auto pack, and then we need to take a decision. Trade less in this particular pack. Stay away if you don't have any clarity about the auto pack. Be very, very careful about it. All right. Okay. Nifty Finance monthly time frame looks good. No issues whatsoever. If you go to the weekly time frame, this is a very good candle, and this is what actually we want in the weekly Bank Nifty chart also, but still it's not happening. So this is a pretty decent close. It is expected that possibly in the next couple of weeks, yes, there will be little bit of consolidation, since this is looking very, very similar to the Nifty. Let me change the hourly chart to the line chart. If you see properly, this is a similar high, and RSI is showing a lower high. This is not a negative divergence. This is not a classical negative divergence, but some sort of consolidation can be expected. But once this consolidation will be over, it is expected that the prices will keep on inching higher. So keep a watch on the financial sector stocks. IT, you can see the price is near the Fibonacci extension in the daily time frame at 261.80% Fibonacci extension, and you can also see that there is a lower high in the RSI, but in the price there is a higher high. So some sort of consolidation, little bit of profit booking can be expected in the short term. You cannot deny that. And in the weekly time frame, yes, the candles are looking very, very good. The trend is looking exceptionally strong. But if you look at the monthly time frame, it is looking highly overstressed. Even RSI is almost above 85. It is around 86.51. So at this level, once again, I'm not interested in any new positional trades. If you have any swing trades or something, it's fine. But I would wait patiently, not as of now. As of now, I will not even initiate any new swing trades. I'll wait patiently. Some sort of consolidation, some sort of profit booking. Once it happens, maybe we see a small dip, maybe a sideways move. Once that is over, after that, if I have any sort of swing trade in my IT stocks, only then I will jump into that. Otherwise, I'll keep waiting patiently. Yes, if you have your older trades going on the long side, continue holding that in trailing stop losses. And if the stop losses get hit, you can come out of your trades. Pharma, if you look properly, you can see in the monthly time frame. Although the current month is not complete, but what I have marked over here, small candles. in the monthly time frame, this particular candle is a smaller one. This is a high wave candle, but this real body is small. So these two candles, if you see, and this is a smaller candle, this is not very small, but yes, the real body is very, very small. And generally when this high wave candle comes on the screen, it generally suggests that I am extremely tired to go up. This is a very dangerous candle. Be very, very careful about this candle. This is a high wave candle and it's a very powerful candle. There is no top out over here or such, but yes, even over here, if I convert the chart to a line chart, there is a negative divergence and it is possible maybe some sort of profit booking, some sort of consolidation cannot be ignored. So stay away from the pharma pack. Be very, very careful. In case if you find any very good high probable trade in the pharma, be very, very careful in initiating it. Especially stay away from the options in the pharma pack, because if it is in a consolidation mode, if you buy it, even if the prices go up after a small sideways move, you will lose money in the premium. So stay away from the options trade in the pharma pack. All right. What you can see in the FMCG pack is looks very good to me. No problems whatsoever. In the weekly time frame, yes, there is some sort of resistance which is coming up, but if prices close above the recent high, again, I think so the trend will continue going higher. Yeah, this particular candle is creating a problem. This is a dark, sort of dark cloud cover. But if the prices are able to close above this with a pretty decent candle, I think so things will be solved. The pick of the stock will be ITC. Yes, I know this is a very slow stock. Recently, yesterday, in fact, I had initiated a very small trade, but in the intraday itself, I made around 4%. So I got out of this particular stock. It has started to look little bit better than before. Keep a watch on it. If you get any swing trades, you can go for this stock. All right. Now mid caps. Mid caps exceptionally overstretched. RSI near 78. I don't think so. I need to tell you that you don't need to initiate any new positional trades in this particular pack. Now, I would first go to the daily time frame. In the daily time frame, I think so. Last week also I had told you, if you remember this, that in case if the price starts moving up, all right, then start booking partial profits or maybe even complete profits in your swing trades in your mid caps. So you can see this particular resistance has hit over here, and this is a sort of a bearish engulfing pattern, not a good looking candle basically. And if I remove this Fibonacci extension and if I go to the weekly time frame, see this negative divergence. Even this recent high, even this close and this close, the current week's close. The current week's close is higher than the previous one, and in the RSI it has made a lower high. So it is a clear-cut sign that the mid-cap index is also getting tired. One more sign, if you can see properly, all the candles since last 6 weeks, maybe 1.5 months, are very, very small. If I hide these candles and see these candles now, these are very decent big green candles, all right? And these are very small candles. So basically, momentum is getting weaker and weaker with time. Try to be mentally alert that some sort of profit booking, some sort of sideways move consolidation can be probable in mid-cap stocks. Try to stay away. In case if there is a very deep correction or something, and then again we have a new breakout, you can go and look for swing trades. All right, but do not jump just on the dip. All right. So I hope this weekly sectoral analysis has helped you. And now I'll start taking your questions one by one.